All right, let's dive in. We're about to tackle a topic that, let's be honest, can feel pretty overwhelming for a lot of people: finance. But here's the plan. We're not going to get lost in the weeds. Instead, we're going to find some real clarity using 10 battle-tested frameworks from strategist Ankush Mukundan.
And this first quote really gets to the heart of the whole thing. The goal isn't to just memorize formulas or crunch numbers. It's about learning to read the story behind those numbers so you can make better decisions. That one shift in perspective, it's the key to everything else we're about to cover.
So why do we even need these frameworks in the first place? Well, because for most of us, finance feels like a high-stakes maze. The decisions we have to make are completely unavoidable, and the consequences, they can be huge.
I mean, think about it. Whether you're running a massive company or just trying to manage your own budget, finance is the engine that makes it all go. But it's so often wrapped up in jargon and complexity that this huge gap opens up between what we know in theory and what we actually do. And that's exactly the gap these frameworks are built to close.
Okay, so this is where we start to find our way out of that maze. We're introducing a really structured, disciplined way of thinking that can take all that overwhelming complexity and break it down into clear, actionable steps. So just take a quick look at this list. These are the 10 big challenges this guide tackles. It's a whole toolkit, right? Covering everything from day-to-day liquidity all the way to tax strategy. Now, obviously, we can't do a deep dive on all 10 right now. So for this explainer, we're going to zoom in on two of the most critical areas for any business: managing cash flow and making smart investments.
First up, cash flow. And let's be clear, this isn't just one of the challenges. For so many businesses, it's the challenge. It is the absolute lifeblood of your operation, and when you master it, you're not just surviving, you're building real lasting strength.
Now, here's something that's so important to understand. A company can be making a profit on paper and still go completely bankrupt. How does that even happen? Well, it's all about timing. Cash comes in and cash goes out, but they almost never happen at the same time. And if you can't manage that gap, it can be absolutely fatal.
So how do you solve for that? Mukundan gives us this incredibly simple 3-pillar framework. First, visibility. You just can't manage what you can't see. Second, velocity. You want to speed up the cash coming in and be strategic about slowing down the cash going out. And third, resilience. You have to build a safety net because things will absolutely go wrong. Visibility, velocity, resilience. It's easy to remember, but man, is it powerful when you put it into practice.
And this metaphor just nails it, right? Imagine a super powerful, high-performance engine. It's perfectly designed. But if you run it without oil, without that liquidity flowing through every part of it, it doesn't matter how good the engine is. It's going to seize up and grind to a halt. That's exactly what bad cash flow does to a good business.
Okay, so how do we actually measure this stuff? You can't just operate on a feeling. You need numbers. And this is where KPIs, or key performance indicators, are crucial. So you've got the cash conversion cycle, which tells you how fast you turn your investments back into cold, hard cash. Shorter is always better. Then there's day sales outstanding. Basically, how long does it take for your customers to actually pay you? And finally, the operating cash flow ratio, which is really just a gut check. Can you cover your bills right now? These numbers together, they're like a real-time dashboard for the financial heartbeat of your company.
And this brings us to the big takeaway for this section. Everything else you do, your growth strategy, your big investment plans, how you manage risk, it all rests on this one single foundation. If you don't have true visibility into your cash, you're not making strategies. You're just guessing.
All right, let's pivot to our second case study. So once your cash flow is stable, the next huge question is, okay, where do we put this money to work for us? This section is all about making every single dollar count for the future.
Now here's another one of those game-changing perspective shifts. We love to blame outside forces, right? A bad market, a downturn. But Mukundan argues that the number one destroyer of long-term wealth isn't the market, it's us. It's making bad decisions internally about where to put our money in the first place.
So how do you avoid that trap? Well, here's the 3-step framework. First, you start with quantitative rigor. You do the hard math using some powerful financial tools to see if the numbers even work. Second, you add qualitative screens. This is the human judgment part. Does this project actually fit our big picture strategy? Is it the right move for us? And third, you stress test it. Basically, you become a professional pessimist. You run the numbers for what happens if everything goes wrong. It's that mix of hard data and disciplined judgment that leads to way better decisions.
So let's quickly look at the tools for that first step, the math. You can think of these as answering 3 really critical questions. Net present value, or NPV, basically asks, Is this project actually going to make us richer or poorer in the long run? Simple. You want that number to be positive. Internal rate of return, or IRR, asks, what's the project's growth rate going to be? You want that to be higher than your minimum acceptable rate. And finally, return on invested capital, or ROIC, asks the most important question of all. Are we getting a good return for the money we're about to sink into this? These aren't just acronyms. They're your data-driven reality check for any big investment.
And wow, this is such a powerful insight. The biggest mistake you can make usually isn't because you made a typo in a spreadsheet. It's because you were trying to solve the wrong problem from the very beginning. And that means sometimes the smartest, most strategic investment you can make is the one you decide not to. The discipline to just say no.
So we've walked through two really concrete examples, but the real lesson here isn't just about cash flow or making investments. It's about adopting a whole new mindset, a proactive, disciplined approach you can apply to any financial challenge that comes your way. And that right there is the key. The goal is not to become immune to problems. That's impossible. Problems are always going to pop up. The market will always be unpredictable. The real goal is to be equipped. With frameworks like these, you stop reacting to crises, and you start seeing challenges coming down the road, ready to respond with a clear, structured plan. And to make all of this real, the guide gives you a direct call to action. Here's your plan for the next 30 days. Step 1. Just pick one. What is your single biggest financial headache right now? Step 2. Figure out where you are today using the right numbers. Step 3. Design a simple 90-day plan to make things better. And Step 4, maybe the most important of all, make someone accountable for it. It's a simple process, but it's an incredibly powerful way to start turning all that complexity into real clarity.
And that brings us to the final question. And this one is for you to think about. When you look at your own business, or maybe even your personal finances, what's that number one challenge that comes to mind? And now that you've seen how these frameworks work, what's the very first small, concrete step you can take to start bringing a little bit of structure to that chaos? Because really, that's what this is all about.